QuantumScape is up 195% this year, and the stock's still trading around 16 bucks. So the question everyone's asking is, can it actually keep climbing? Because here's the thing, this company still makes zero revenue, but it's sitting on $1 billion in assets, and its losses are narrowing, and it just posted a 14% improvement in adjusted EBITDA. So what's driving all this kind of momentum? Simple. It's belief. Investors are betting and believing that QuantumScape's solid-state battery technology, the ones that's backed by Volkswagen's PowerCo, will finally deliver. If it works, it changes everything for EVs. Longer range, faster charging, way safer. But if it doesn't, the whole thing unravels fast. And with a beta of 4.85, this stock moves harder than almost anything else in the market. Now, there is one signal I'm watching that could tell us whether the run still has legs, and most people, I don't think they're even looking at it. In this video, I'm going to break all of that down. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So with all that out of the way, is QuantumScape the future of EV batteries or just another shiny tech dream? Well, to answer that, let's get into it. QuantumScape remains one of the highly recognized battery innovators of 2025. Their mission remains simple yet ambitious: to revolutionize the electric mobility industry with solid-state lithium metal batteries. And that promises longer range, faster charging, and greater safety than traditional lithium-ion counterparts. Sounds incredible, right? But there's a catch. No one's fully commercialized this technology just yet. And that's where QuantumScape's real story begins. The company is headquartered in San Jose and spent the last 15 years innovating battery science. 15 years. So that's not a startup exactly, right? That's a marathon of R&D. So when you hear solid state, you're hearing about a company that's been grinding for a decade and a half to solve one of EV's biggest battery problems: energy density. Its dedication enabled an advanced ceramic separator that replaces the standard liquid electrolyte that's used in traditional batteries. QuantumScape's product prevents short circuits and generally enhances energy density, which could be the game changer for the economics of electric vehicles, or EVs. In plain English, QuantumScape's ceramic layer is what keeps the battery from catching fire, and it lets it store more juice. If this can scale, it could change how every automaker designs EVs. Now, QuantumScape isn't a total shot in the dark. Its partners include Volkswagen and its power division, PowerCo, which has been a critical part of the entire journey. PowerCo has a milestone-based right to QuantumScape's technology, which means that each achievement will unlock higher production capacity and future royalties. In plain English, PowerCo is QuantumScape's key to scaling, even without building one of its own factories. And that's a big deal, because while other startups burn billions on production, QuantumScape could grow by licensing. Think of Intel Inside, but for EV batteries. And that begs the question, can this partnership actually bring solid-state batteries to market before the competition does? Well, stick around, because what happens next could decide whether QuantumScape becomes the next Tesla or just another overhyped promise. Now, let's see how the stock is faring today, because that's probably why you're here. The last time I covered it, QuantumScape stock was trading at nearly $15. And there has been some volatility since then, with the stock trading or dropping below $14 for a bit. But now it's back up to $16, or at least around that point. It might not sound like much, but that small move represents a massive swing for a company this volatile. Looking at the bigger picture, QS stock is having a tremendous 2025, up 195% year to date and 135% in the last 52 weeks. Pretty solid performance all around. So you could say the market's waking up to something, or maybe it's just running hot. Either way, that kind of move demands a closer look. QuantumScape stock has a 4.85 60-month beta. Now, beta is a measure of how volatile the stock is compared to, in this case, the S&P 500. And with that baseline being 1, it means that QuantumScape stock moves a heck of a lot more than the broader market. So yes, it's all green now, but if it moves down, that move is going to be significant. Translation, this isn't your steady compounder. It's a thrill ride. One good quarter could send it flying higher, and one bad update could cut it in half. The question is now, can QuantumScape deliver according to its timeline? And actually, that's something that's come up in my Discord. And it's totally fair because in this game, execution isn't optional. It's everything. Now, with all that out of the way, let's talk about the company's numbers. QuantumScape recently released its third quarter financials, and as expected, the top line still zero, still pre-revenue, which means the story right now isn't about profit, it's about progress. Now, net losses, they reached about 105 million, or a loss of 18 cents per share, narrowing by about 11% year over year. So while they're still burning cash, the burn rate is improving, and that's what early stage investors love to see. Over on the balance sheet, QuantumScape ended the quarter with $1 billion in total current assets, which is relatively flat over the last year. On the other hand, current liabilities reached about 48 million, which was about 26% lower. Combined with its growing assets, this tells us that the company is improving liquidity, at least in the short term. And this can also be seen through the company's current ratio, which is calculated by dividing the current assets by the current liabilities. In this case, QuantumScape's current ratio is 21. That means it has 21 times more liquid assets than it does short-term liabilities. It's like having $21 in cash for every $1 that you owe. And that's a fortress of a balance sheet, at least for now. Now, let's switch over to expectations. Management expects full-year adjusted EBITDA losses to come in between 245 and 260 million. EBITDA stands for earnings before interest, taxes, depreciation, and amortization, which basically tells us how much cash the company is generating from its core operations before accounting for financing costs and non-cash expenses. Adjusted EBITDA, however, further strips down the numbers by removing things like stock-based compensation, one-off expenses like lease termination losses, legal fees, impairments, and other things like that. In short, adjusted EBITDA tells us how efficiently the business is running without the noise. It's not perfect, but I find that it's useful to spot trends. So going by that metric, we are seeing some operational improvements. Q3 adjusted EBITDA losses dropped 14% to 61.4 million year over year. The company only needs to maintain that level next quarter to meet its full year guidance. And that's progress, small but real. You could say that QuantumScape's learning to walk before it runs. So that's it for QuantumScape's financials. But is the stock a buy? Because what Wall Street thinks might surprise you. A consensus among 9 analysts rate QuantumScape stock a hold. And this is a sentiment that's been consistent over the last 3 months. And notably, there's 3 strong sell ratings. QuantumScape's high price target is $16, and at this point, the trading price is already past the high target price. So the hold ratings are not really surprising. But We probably just need to wait on analysts to adjust their targets, especially with their recently released third quarter financials. Because when a stock trades above the analyst top targets, that's when revisions, upgrades, or downgrades often start rolling in and volatility kicks in again. So, do you think analysts are going to be bullish or bearish this time? Or is QuantumScape bound for more problems? Let me know in the comments below. And while you're there, don't forget to like and subscribe. It helps the channel. Others will find the video, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today. Thank you so much for watching, and I'll see you next time.